Today, we have a very special guest, Sara Strat Sniper. Very grateful to have her in today as a wealth of knowledge and just a wonderful person altogether. So Sara, say hi to everybody.
Hello, everybody. I'm so excited to be here. Like I said, me and Rich from Trading Wars, we are new friends, and I just kind of caught one of his charts and I was like, oh my God, he does what I do. I have to be his friend and his follower. So I'm super excited to be on here today.
All right. So the first thing that I wanted to get started off with is I wanted to go to Sara's Twitter here, and I wanted to show you guys something that really caught my attention. I think is a lot of value. So right here in her pinned tweet, she has this amazing Google Docs package here, guys. I have it right here. And look at all of this value right here, guys. We have cheat sheets, we have some YouTube videos, we have some great channels to follow. So please go ahead and go through this material. Something that I pulled up right here, guys, is this Strat Combos sheet. So we'll be talking about this one. I think this is amazing. And I have the YouTube video playlist. So make sure you guys check that all out. I mean, guys, it doesn't get any better than this. You have someone that's literally holding your hand. And we got to show appreciation and love when we can. All right. So let me get into here. So Sara, let's start off with, just your background in trading. So I know you said today was your 3-year anniversary. So how did this all get started?
I got started trading in 2017 when the crypto bubble was starting. My brother introduced it to me, told me I needed to get in it. And I fell in love, not with the money. I was intrigued. I was so intrigued. I was like, how could I possibly make $1,000 while I'm asleep? This is insane. And so that just like scratched that spot in my brain. And I'm like, what is this world? And I can do it all by myself. So I went to the internet and I just started looking for any and everything that I could find. And I found the chart guys. I started with the chart guys in 2017. And I had a full-time job. I was a manager. I'd been at this company for 11 years, worked my way from a cashier all the way to a manager of the top store out of 80 stores. So just busted my ass. Mm-hmm. And then I was like, I don't like what I'm doing. I don't like it. I mean, the money's good, but I'm over managing people who don't want to be managed, don't want to be motivated. I just want to do me, worry about myself. And I just spent every waking moment learning technical analysis, even while I was at work. Like I would have earbuds in and I would just be listening to Dan from the chart guys all day long. I was obsessed. So I started with crypto, which was a fun time. And then when it hit the top, I couldn't short it without being illegal and like getting a VPN and all that. So that's kind of how I made my way into stocks, and then just kind of went from there.
So where did the strat come into play?
Okay. So the strat came into play because I had been trading for like close to a year, and I still there was something I was missing, and I wasn't even sure what it was. And I was just searching the internet for more, like we do, got to find the answers. And I came across the strat, and it just really piqued my interest. Mm-hmm. And what I realized, the piece that I was missing was where to take profit. Mm-hmm. And so the strat is what gave me, it's like pretty cut and dry. Like, if this, then that. So if this happens, you enter, and then you have a defined area of where you're going to take your profit. And that was perfect for me. And I don't care if I miss a little bit more. I got into the trade. I got out where I was supposed to. Boom, done, success, move on. So that was what I was missing.
Beautiful. So let's pause right there, because this is an important topic that we talk about all the time on my channel, is about removing the subjectivity in trading, removing the human judgment part. And that's something that, the strat, I've looked at it, guys, here, looking at the listing and their patterns. It either is or isn't. That's one of the things that's very important with any variation of inside bars, outside bars, or just candlesticks in general, guys. They're very, very simple, powerful tools, because You know, something like this, Microsoft here, we have this double inside bar pattern on my chart. This was one on the weekly chart that we were looking at last week. And, you know, for this condition to happen, it has to, there's no judgment involved. If you look at this chart, everyone can tell you this is a double inside bar pattern. And having that type of ability to remove the human aspect of it. I know you were talking about you're more of a day trader than a swing trader. So, so talk us through that. So
I have started using more options. And the reason for that is, one, my risk is defined right off the top. So I don't even so much have to worry about a stop loss. I mean, I do. If it goes against me, I will cut it. But the most I will ever lose is whatever I put into it. So that for me, as far as like a risk management tool, is a big deal. And I did a chat with another trader earlier, and I was telling her that the only reason I'm even here now is because of my risk management. And like, I treaded water for like 2 years before I could figure it out, really. Yeah. So options is a great way to like keep the fear down, and obviously the percent gains are so much bigger and faster. And I guess that fits more of my attitude. I like things to happen faster. So
yeah, and
that's why I'm not a good swing trader. I'm too impatient.
How do you use the time frame continuity, especially when you're day trading? How do you get that down into a lower time frame?
Okay, so here's the thing with the strat and with time frame continuity, we tell the newer traders to stick to full time frame continuity, which means you have at least 4 of the big time frames are the same color, meaning you've got, let's just say, the monthly, the weekly, the daily, and the hourly. And that just keeps them on the path of the trend is your friend. So if all of those time frames are green, that means that it's obviously in an uptrend. People are buying, and they're buying on every time frame. And, you know, you do have people who only trade certain time frames. So like the investors, you know, they might use the monthly. You have the weekly traders. You have the daily time frame traders. So we encourage the newer people to stick to that. Now, we do use broadening formations and stuff like that, which is kind of a counter trend time frame continuity, which I do not recommend that newer traders start off with. It was one of the things that took me the longest to understand. But I was looking at something else about time frame continuity when I was looking at your Twitter page today. You have a drill down method,
yes,
which is what we use multiple time frame analysis. So, and what that means is we will use the smaller time frames to trigger the larger time frames.
Exactly.
So often I will, and I post a lot of weekly chart setups because I love the weekly time frame. They play out like 90% perfectly of what I think is going to happen, what I see on the chart, and what I expect to happen. It pretty much always plays out. So what we'll do is we'll go down to the daily, and we'll use one of our actionable signals from that Strat combo sheet, and says, you know, so the daily time frame, if this happens, that will trigger the weekly time frame. So your drill down method is so much similar to what we do in using the smaller time frame participants to trigger the bigger time frame participants.
Got it. I'm gonna walk through kind of what I did with this one, and then I would love for you to walk through it as well, and then we can you know, compare and contrast and just give so much knowledge to everyone. Right here, we have this the second inside bar here, and what I like doing here is literally bracketing the bar. So if we break the low of this bar, short. If we break the high, go long. So that's kind of the easiest way that I explain it to traders. And then what I like to do is I like to stack a fib on this. So if I take a fib here from the high to the low right here, and you know, obviously we trigger to the short side, guys. So what I would do here is once we trigger to the short side, I'm gonna use the position tool right here, guys. I'm gonna short on that low, and my stop loss is gonna be on one of the key Fibonacci's. And the reason I do that is so that I can get enough size. I can get big size if I want to. So the tighter I go right here, guys, the more size I'm going to have to get. And you can see right here, the quantity is changing. So that's telling me how many shares I need to purchase in order to satisfy my risk unit. So let's go ahead and let me just put this in here. So let's say I want to risk $1,000 on this trade. So I'm going to put $1,000 in here. Okay. And it's going to tell me right here. All right. So if I short here and I want to put my stop, let's say I want to put it on the 618 to be a little bit conservative, then I need to buy 321 shares. Okay. And then just hitting the bar replay, obviously, okay, we get filled, we pop up a little bit there, and then we push down by the end of the week. And that would have hit, let's see what target there, that would have hit 1-to-1. Okay. So that's a $1,000 profit. Definitely for me, I like using the Fibonacci extensions from my targets as well as risk multiples. So if I'm at 1-to-1, guys, I'm going to take off close to half my position, and then I'm going to get my stop loss down. I'm either going to put my stop loss on the bar, or I'm going to put my stop loss at break even for the rest of the position. So I guess that's the way I look at triggers. But let's go ahead and let me hit the replay again, and let's go to the hourly chart. So this is a way of what I like to call front running. We front run the trigger before it breaks. And that's very, very, very important to do, because you can get a higher risk to reward. So here we go. Right here, guys, this is a clear break right here. So what I say is, if we miss that break, we don't want to chase it. Instead, what we can do, guys, is wait for this retest. So there we go. So we get the inside bar coming back in for the retest right here. So this is a retest entry right here. And then as you can see, guys, another outside bar here. So this outside bar here, guys, could be my trigger right there. So just taking this outside bar with the close, I can see the retest right here. I can put my stop loss above the initial trigger bar. And then we all know what happens from there, right? Boom, nice push down. We can see here when we touch that 50% extension, we start to push back up, and then we roll back in to the end of the day. All right, so sorry for the long-winded explanation, but yeah, that's kind of how I look at it, guys. And let's look at Sarah's method here. Do you want to share your screen, or do you want me to drive?
Oh, I definitely want to share my screen.
Okay, gotcha. All right, so let me remove.
When you're up at all-time highs, via the strat, like, we consider this to be exhaustion risk. So sometimes you will look for reversals to the downside because you have no one else to be long against if you're at all-time highs. So unless people just continue to buy this, you're not playing against anybody, because there's no orders up here, right? There's no previous price history up here because we're at all-time highs. So this is what we call exhaustion risk. And you would look for reversals to the downside. Now, I do a exactly similar thing as Rich, is I'll look for inside bars, and I mark the high and the low. And it's very simple. So if I break, so I would not take this long, because I don't know what my target would be. And that's the thing with the strat. You have an entry, you have a stop, you have a target. You have to have all those things. So with this, my target would just be a new all-time high, which is nothing. That's like a $1 move. So I wouldn't even take that to the long side personally.
Got it.
So to the downside, so if we break $300.18, my first target would be the bottom of this candle at 296.83. My second target, just using the weekly time frame, would be 288.64. Then we drill down into the smaller time frames, and you can find, well, not in this case. Normally you can find other targets on the daily, but you had two back-to-back outside bars. So that would just be the next target. And then we would use multiple time frame analysis. So we know that if this white line breaks, that we want to be short. So we will go down on the weekly time frame. That white line comes from the weekly. So we would go down to the daily, and we would look for our strat combo setups. So this is a 2-1-2. So what that means is we would get in on this day when we break the low of the inside day. So now we're triggered in on this day, and then you can put your stop at the high of this day. So your entry is 300, your stop is 302, and you're targeting 296.83. So what is that? Like that's not great risk reward. So a $3 downside move and a $2 stop. So you obviously always have to be, mindful of risk reward and is it worth the trade? But that's how we do it. And it did play out. It just took 1, 2, 3, 4 days, which would have been testing my patience like crazy.
Got it.
But
Right.
it did work.
Mm-hmm.
But this is also, so this is one of those things where you're fighting against time frame continuity because all the time frames are green if you go to the daily. Well, no, we started a new month. So the strat also factors in time. And you'll notice if you go to the monthly, as soon as the new candle opened, so August was all buying. And then as soon as September opened, they just started selling this thing.
Mm-hmm.
So we use the flip. So what the flip is, it's any new time frame, any new candle starting. So the monthly is a new candle starting. The new week is a new candle starting. So starting this new week, this new month, it was just selling.
Mm-hmm.
So time frame continuity is actually to the downside on the monthly and the weekly. So we want to play reversals into the direction of time frame continuity, which is monthly and weekly.
Got it.
Which is red. Selling.
Got it. So would you? So I guess from a day trade perspective, once that trigger hits, are you getting put options right off the bat? Shorting shares, and are you going to cover them by the end of the day? Are you going to leave some on for runners? How do you approach that from like the intraday mechanics?
Okay, so everybody kind of does it differently, but what I would do is I buy my target strike. So I don't buy the 300s. I would buy like the 297.50s or probably the 297.50s, the weeklies, because that's the other thing. We're using the weekly time frame. So I don't need to buy time. I expect my trade to work out in 1 week's time.
Got it.
So play your time frame. So if you're on the 1 week chart, it should take 1 week. If you're on the daily chart, your setup should take 1 day.
And
so that's kind of how I do it.
Because for me, normally what I do with whatever time frame I'm on, I multiply it by 2 or 3 for the expiry. So it's interesting to see that you guys actually do it on the same week. So basically you're saying it's gonna work. It has to work now for our style, and if it does work, we're gonna get paid, which is what's really important. And if it doesn't work, yeah. And if it doesn't work,
we get out immediately.
Got it.
Like if for some reason it turns against us, but playing the weeklies on the weekly time frame, your percentage gains are a lot bigger, but it's also a lot riskier because if it doesn't work out, and that's where the risk management again comes in, you're going to lose time, you're going to lose value, so you have to size accordingly.
And that's why options are so powerful, because like we talked about earlier, what you put in is what you can lose, and that's the most important thing. Is when you're coming into these plays, you really have to consider, at best, you might have a 70%, 80% win rate. But if let's say your strategy is not working, let's say this month or this quarter, you could have a 40% win rate. So you really need to focus on the position sizing part of the game in order to preserve your capital. And if you can't preserve your capital, then you won't be able to trade. So that's definitely one of the most important things. So I love this time frame continuity. How do you get those the time frame icons and the green arrows and all that on your chart? Is that something in TrendSpider?
This is actually TradingView.
It's TradingView. Oh,
so TradingView, I like to use it better for drawing. I find it easier to draw on. But TrendSpider is what I use for my scans, and I think this is in my pinned tweet. I believe that's beautiful. the Crinklebine favorites Board Rider B. Time frame continuity by Board Rider B.
Awesome. Got it. That's an interesting one. I haven't really seen something like that before, so that's amazing.
And then the other thing is, if all these 3 candles are trading inside this giant mother bar.
Mm-hmm.
So typically this is not a trade that I would take, because I would not expect like this to hit all the way down here. You know, it's so we also have this thing called mother bar problems, which this is what this is. It's kind of just trading in this little range. Actually, the range right now is like this, but the mother bar is, you know, this one.
And I guess that's one of the reasons that I like to use the fibs too, is because I could see that second the bar that triggered us in there. It's pretty much the same size as that bar, the second inside bar. So just taking a fib and projecting it over can show you, you know, the key areas where we could kind of find a bottom and start to reverse. Because like you said, there are mother bar problems. I like that one. There are mother bar problems there because there are big bulls in that bar. Look, you can see the size of the bar. You can see that there's a lot of volume in there. Yeah. But yeah, great. I love it. So guys, that's a new one. So get the pen and the pad out, guys. We're going to do a pen and a pad alert right now, guys. So in this lesson here for the pen and the pad alert, what I want you guys to write down is always beware of mother bar problems, guys. That's actually something that's important because you have to remember, if you look at these bars, these last 3 bars, they're really small relative to that mother bar. And at any point, right, if those institutions or whichever large organization created that big bar, if they want to step in, guys, they can again. And as retail, if you're on the wrong side of that, you can definitely lose some money. So that's why it's important, as quickly as these move, you need to be scaling out, locking in profit, moving up your stop, protecting yourself at all costs. So just for beginners, I have a lot of beginners that follow me. What is, I guess, your most critical, important advice to beginners? How can they get involved in trading? How can they make money? How can they protect their capital? I guess, what are your tips for them?
Oh man. I always go back to risk management, because if you lose your money, you're done.
Yep.
So just know ahead of time how much money you're willing to risk. And the thing is you have to follow it. You can't keep moving your stop loss. You can't go from a $100 risk to a $500 risk. And also, newer traders, never hold through earnings. Just don't do it. Just get in the habit of not doing that.
Let me write that down right here. So never hold through earnings. Changing your risk unit. That's very important. I think a lot of new traders do that. I fell victim to this many times, actually. So in the past, if I'd had a winning streak, let's say I was risking $100 a trade, and I had a winning streak of 5 trades, and then I'm like, well, guess what? I'm Superman now, so I'm going to risk $500 on the next trade. I take a loser on that trade and wipe out all the gains that I worked so hard to make. So now what I do, I actually wrote this down in my business plan here, when I'm growing my capital, is every single week I'm going to increase my risk unit by $25. So I just put that out there, so that way, instead of like going from $100 risk to 200 next month, I'm slowly increasing it so I can kind of let the risk be evenly distributed, so I don't have big up and downs in my account. So that's something that I told myself that I would start doing. But yeah, these are all great tips. So inside bar questions. So inside bars. So I guess out of these patterns here, what's your favorite one? What's one that you've had the most success? Let me pull up your patterns again right here. Which one do you kind of stick to? Do you trade all of them, or do you look specifically for ones that you've had success with in the past?
I get asked this all the time. What is my favorite one? And I don't have a favorite one, because it all depends on the bigger picture of the stock. It really, really does. Like a couple of weeks ago, I even mentioned, I was like, don't sleep on Penn and Draftkings, because I saw the setup on the monthly, and just because I see a setup on the monthly, I'm drilling down into the time frames, so the weekly and the daily. So whatever it is, whatever the setup is, I do prefer on a longer term play that there has been a pullback, which usually is a rev strat. So it's an inside bar and then a little bit of a pullback, which we call a 2 down. Maybe if I could.
Yeah. Let me throw you back on there. Go for it.
Yeah.
Let me add to stream again. Boom. I think you're back. You're back.
Am I? Okay.
Yeah.
So Okay, so right here. So you had an inside bar, which you could have taken this short if you wanted to, and that would have been the target, but it failed.
Yes.
So that means we want to play on the side of the winning team. I refer to this as playing, we're fair weather fans. So the Bears lost, so we're going to go and switch to the Bulls. We want to be on the winning team. So on the Strat combo sheet, a rev strat is a 1, a 2 down, and a 2 down just means it broke the downside of the previous candle.
Got it.
Okay. Followed by a 2 up in the opposite direction. So I knew that the monthly trigger, and we also have something called a pivot machine gun where you have consecutive lower highs. So these are all targets. Look where it stopped. I'm just going to throw that out there. Stopped right at that 64.60 level. So let's make this white. This is the trigger. I did that the long way. Okay.
Got it. So this would be getting in on a 2. So a 2 is a bar that just breaks one side. Is that right?
Correct.
Okay, gotcha.
So an inside bar is a 1, an outside bar is a 3, and then a 2 is a directional bar. So it only broke one side of the previous bar. So that's a 2 up.
I love the pink outside bar, by the way. That's amazing.
Thank you. Okay, so 53.39 is the monthly trigger. So the longer term players are going to be looking for this level to get in. So we will drill down. Let's go to the weekly. What happened on the weekly? Okay, so remember, we like to enter on reversals. So you had consecutive higher lows here, here, here. So we hadn't had a pullback. So you have a tiny little pullback here. So this is a 2 down, 2 up reversal. So you want to enter when this week opens, when we break the high of this week.
Got it.
And now we are in force. So anytime we're above 53.39, we're in force on the monthly. So that was the entry. That was the stop. This green line was target 1, target 2, target 3, all the way up.
Amazing.
And look at this. Look at where it stopped. 64.58, 2 cents away from my target on the monthly chart. Rocco? No. Sorry, my dog.
We got a Rocco alert, guys.
He's a talker. And then, so you could have entered here, okay? And then you had no reversal against you. You had an inside bar. You could have added here and took half of your profit here if you wanted and held your remaining half from down here in hopes that you hit a new all-time high because that's the new target.
Got it. That's amazing. And actually for DraftKings, so DraftKings was the only swing trade that we actually entered in the private swing room that I have. We actually took that weekly inside bar. And I guess the way that I look at the biases and whatnot is I was actually looking at that mother bar on the weekly chart, that mother bar beside the inside bar. Basically, that's how I picked my bias. I said, all right, we got a big mother bar push, and I'm going to take that long right there. So we got in at that. The only difference I would say is I used the Fibonacci's of that inside bar. I just flipped it over and projected it. And that's pretty much where we're scaling out. So I got in with shares and call options. And the good thing is we do it all fully automated, right? So actually last Saturday night, I put the orders in the broker to buy the shares at the trigger with stop limit orders good to cancel. And then I also set up a conditional order. So if it broke above X price, then buy calls. So I did both of them, still holding the shares, scaled out, the calls scaled out as well. And then now the stop is at break even. So, I mean, we'll see how the rest plays out, but that's just like, a very simple way right there. Just taking it bar by bar, guys. Very, very simple, bar by bar. I love how you guys go with those reversal down. So I guess that 2 reversal down, and then you can pretty much play that bar itself, which is something I don't do. Because I feel the only reason I don't do the 2s is because then I feel like there's just so much. I try to keep it pretty mechanical. Like on a weekly basis, I'll probably hit like 30 to 50 inside bars, or variations of, so doubles and holies and etc. But yeah, this is awesome. So do you trade, I guess, do you trade outside bars at all?
Oh yeah.
Got it.
So I love failed twos. Okay. So I have a rule. So for outside bars, so an outside bar is a two that went down but started coming back through. So I have a 50% rule. So what that means is, so once this candle has retraced 50% or more of this candle, I will say, and I say this all the time, I'm like, potential outside bar. And what that means is that the high of the previous candle is your target. So for this example, I would have entered at 46.50 and my target would have been 49.60, because if they took out the low of this side, especially on gap downs, when you gap down, and most people should know this rule, gap downs are usually for buying and gap ups are usually for selling. So you want to be on the buying side. And you could have, and this is great. And people are like, well, what do I do with this? You buy the 49 calls at $46 because you know it's going to take out the high of the previous bar. Beautiful. So you can even go 3 strikes out of the money and still bank. So if you don't have a large account, these outside bars are great because you can get cheaper contracts and make a lot more percentage.
I love that. I love that. How did you come up with that rule? That's for me, that sounds a lot similar to like the Fibonacci look there. So that's amazing. How'd you come up with that one?
I don't even, so it's so funny because the Strat cheat sheet didn't exist. So I actually made this. I have I drew it with colored pencils and marker.
Wow.
And I drew the Strat cheat sheet and I was like, because I'm not very computery. So I was like, can somebody please like make this into a document that I can share with people? And so just over time and watching how outside bars played out, I was like, a 50% rule is a great rule. And that's what I teach. That's what I tell people to do. A third of the candle just isn't enough because that's a lot of space to cover still, you know? But I don't know. I was like 50%. That's what we're doing. I like it.
And I found a lot just doing my own research and back testing that the outside bars on the big time frames, like the monthlies, are very important pivots, because breaking the low and the high of the previous candle is very important, because it's a trap in a sense that we broke to the downside. So definitely some people were shorting. We broke to the upside. Some people were going long. And having that accumulation of trap traders in that outside bar, usually when we break out of the range of the outside bar, you know, that's a high probability setup. The only thing is the outside bars are so much bigger, right? And the inside bars kind of give you a tight risk to reward.
Yeah, yes, but that shows you the aggression that buyers are in control. And this was another one with Penn, why I was telling people to watch Penn and Draftkings, because I saw them try to take out the lows. People call this a stop hunt. It's really not. This happens all the time. This is how price action works. They always take out the lows.
Oh, yeah.
And so I was like, watch this. We're going to hit 79.20 this month. We're going to become an outside bar. So I said, if we, breach the 50% level, we're going here. And we did. And then that was the next target. And it hit that. And it hit that and started failing. So potentially right now, we have the potential to do consecutive outside bars on Penn.
Yeah, that's
so
true.
Be careful if you're long Penn, because it did its job. That was the target, 85.69, and it hit 86.40. So 80 cents past its target.
Amazing. Wow. Yeah.
And outside bars are broadening formations on smaller time frames. So we'll draw it like this. So we have an outside bar. So if you go down, this is not a great example, but Yeah, let's go to Chewy. That was a good one. So with broadening formations, they stop everybody out because you make a new high and then you have a pullback, you have a low. So most people who are swing traders, after this low was created, that's where they would put their stop. So you have a low, then you made a new high, then you made a new low, then you made a new high, then you made a new low. So when we're trading this, okay. So we know everybody who was long from here and rode this up had their stop here. So once the price came down, hammered up, we would be long, and then our target would be a new high. So once we got the new high, then we would get out, or you could go short. Then you have a 2 up and then a 2 down reversal. So then the target again is to make a new low, which it did. See, we made a new low. Then the new target is to make a new high compared to this one, which we did right here. But do you see how that would stop everybody out?
Yeah, yeah. And that to me, those
long.
broadening formations to me seem a lot like the Fibonacci projections. Because if I look at it from just looking at it from my eye, I could see there's usually, it looks like about a 10% new high each time. And 10% high, then a pullback, or around a 272 high and then a pullback. Yeah, definitely. So for me, I guess the way that I look at that is more of algorithms that are taking those trades. They have predetermined targets, whether it's a 10% extension, 272 extension, whatever it is. And every time we hit those targets, they start to dump and pull back, and creates that kind of that megaphone effect.
Yes, and this is why we're not breakout traders. The breakout is our exit target, or the breakdown is our exit target. So if we are long from here, we're now short up here, and then a new low would be the target, and then you'd flip back, go long, the new target's a new high. So we don't, we're not entering when we get a new high. That's where we're exiting, and we're in from down here.
Gotcha. Beautiful, beautiful. Actually, if you don't mind, can I just throw up my chart too, just to show?
Yeah, go for it.
It looks really, really nice here, guys. So I have the same thing Sarah has here, guys. I just, obviously my color coordination is a little bit different. But here we go. So that broadening formation, let me see if I can try to draw it. So if we take this daily here, take these trend line, I guess we can start from back here, kind of projecting it like this down here.
So what I do is I go from a high to a higher high.
High to higher high. So let's take this one from here to here, and then we can continue. So we have 3 points
there you
right.
Go. That'll work.
And then we have
a low to a lower low. You might have to go start a little higher.
Over here. Gotcha.
Find a pivot low and connect it to a pivot low.
Gotcha. Okay. So
there you go. Perfect.
And then there we go. Beautiful. So this formation right here, guys, is very powerful, because let me zoom in here. So if I was to go ahead and start adding some Fibonacci's to this, so we could see we have a swing low right down here, and then we have this swing high right up here, guys. And then check this out, guys. So now if we have the broadening formation right here, we have this. Let me take this drawing tool out here. So we have this. Actually, let me get the arrow. So we have this push up, okay, and we pull back. Look at this, guys. So we pull back right here, tag the 50, okay, and you can see right on that 50 here, there was that big wick. So that's characteristics of an algo buy. And then look at this. On the way up, we stop at the 10%, drop a little bit down, retest some of these fibs, and then look again, guys. We tag the 272 and start dropping down. And then look at this. Now we come all the way back down to the 786. And if we look at the bigger picture here, and we pull this Fibonacci out even further, we can see again these areas being tagged. So it's amazing when you take this this formation here, we stack the fibs on it, and we can see You know, it's all almost like we're living in a robot's paradise here. Just percentages, 50% targets, and then reversals. So this knowledge is so important for you guys to know, because if you're long and you're going into breakouts, you gotta have these formations, you gotta have these fibs up here to help you scaling out. And it's the same thing when you're going to the downside. You got to know where these fibs could be, and these broadening formations down here to help you see where algos can step back in. So I think that is very, very critical there, and it just two different ways of looking at it. But I mean, I guess it's even more powerful when you overlap them on top of each other.
Yeah,
that's powerful. Wow,
that's awesome.
Wow. So there we go, Sarah. I mean, we're at 53 minutes in here. I don't even know where the time goes. It always goes like this when we're hanging out. But what I want to do is I want to give you the floor right here. There's obviously been a lot of questions in the chat about, you know, your indicators, your patterns, what you do. So I want to give you the floor. What's the best way that people can follow your material, that they can learn from you? I know you have a YouTube channel, but what else? How would you recommend people to go about doing that?
I would recommend people follow me on Twitter, because like you showed earlier, my pinned tweet, I made that for you guys. I want my followers to have access, and I want them to have easy access to everything that I teach, I try to make things. It must be I'm a mom, I was a manager, so I understand that learning has to be easy. So I try to lay it out in a way that is easy for people to see. I'm crazy OCD, so everything is nuts. But everything is on here. So my Twitter handle is @TradeSniperSara. And then, you know, my little name is Sarah Strat Sniper, because I like the way that sounds better. But yeah, everything is on here. My YouTube link is in my Twitter bio. It is also in this Google Doc. Yeah, and I try to do weekly Stratchication Saturday videos, except I've been just balls to the wall crazy this month. I'm trying to sell my house, so I'm spending every waking moment painting. You know, so I haven't been so active on Twitter this past month, and I miss it terribly, but gotta sell the house while the market's hot. You know what I'm saying? I want that 40%.
Definitely. So I have your YouTube here. Look at this content, guys. This is amazing. There's so much for us to learn. There's so much ways to keep learning, guys. Always keep learning. You never know it all. Trading is a game that changes every month, every season. Sometimes fibs are working. Sometimes order flow is working. Sometimes that's the game of trading, guys. If something worked 100% of the time, then we wouldn't be having these discussions. So the main thing to always remember, like Sarah said, is focus on the risk part of the game. Every setup you take, almost if you look at it over thousands of trades, it's going to come down to a coin toss. The question is, when you right, are you making a lot? And when you're wrong, are you losing a small fraction of your account? But here we go. So almost at 10K subscribers. Guys, please subscribe to Sarah's channel. Let's see if we can help her get over the 10K mark. And then you definitely deserve it. And then here we go again. This right here, the Strat Combos. I would print this out, guys. Take it, put it on your desk somewhere. And you don't have to trade all the patterns, but definitely have them there as reference, I would say. Very, very, very good to have.
And that's a great point. Some people just, you know, really focus on one pattern, and that's really all you need. If you can get really good at trading one pattern, that's all you need. Like 2-1-2s, they're the easiest ones, especially when it's full time frame continuity. You know, just it's really all you need.
Got it. So the 2-1-2. Okay, gotcha.
Yep. So like that top left one.
This one right here. All right, good. So guys in the chat, let's keep a lookout for these ones with Sarah. You know, let's bring this to our attention, to the community, and let's keep our eyes open for this. They're definitely very, very powerful. For me, guys, most of my trading is just inside bars, because I like the risk to reward. That's factored into that. And I just like doing a few scans at the end of the week and getting my list. And for some people, more is better, because some people will get bored trading the same thing over and over again. But for me, I really want to just do the same thing that I can automate every single week and that I know I'm making money with. Because at the end of the day, we're all here to make money, right? So find which patterns work with you. It's, you know, which one fits your personality. Some of you guys like to go for home runs. I know that, right? Some of you guys like to go for home runs. Some of you guys like to be in and out. So you got to find those patterns that are going to suit your style and your personality. Beautiful.
Exactly right. And I'm very curious to see since you've seen this 2-1-2, I'm very curious to see if you notice that it always takes out the mother bar of the inside bar. So if that's always the target, or if your fibs are a little bit different, I'm real curious to see, because I don't use fibs at all.
My opinion, Sarah, is from a lot of the back testing that I've done. You know, I have a lot of data behind my targets because, you know, I'm one of those guys just like you. Just, you know, OCD, need the numbers, need it to line up. And for me, generally, what I would say about those targets is I would look for a 10% extension on that target. I would go for a little bit above that target.
Perfect. Exactly. Yes.
Normally what I see is that if it's going to touch that level, it's going to push the 10% anyways. So you might as well, you know, get a little bit more profits in there. And that's actually, the 10% is not really a Fibonacci, but it's something that I basically developed from trading for a long time, and the back test and the data that I had, I came up with that 10% because most of the times, if you want to be reliable, take that level, add the 10% extension on it. That's kind of where I see most of the targets being very, very reliable. But at the end of the day, you know, it's cyclical in nature, in my opinion, meaning sometimes the 10% is better. Sometimes it's not even better to go for the target at all because the market is not even getting there in some cases. So that will really come down to proper risk management. That's the only thing that's going to protect you when the targets are not getting to where they need to be.
And I like what you said a little about the overshooting, because the overshooting, so on the third two, so the third bar
right here,
that could be your that little 10% extension. That could be the top of the broadening formation.
Yes. And one thing I wanted to say before I forget, I was going to mention this, but I actually have a reversal strategy. So which is pretty much, it's not even, it's looking at it in a blind sense, having limit orders on those extensions. So for example, here with that 10% extension, when I'm getting out on my long position, I'm simultaneously buying puts because I know the risk to reward is good. Because the way that options work as well is if it's coming into my order, if it's pushing into the 10% order, the puts are going to be cheap. So that in itself is giving me a great risk to reward. And even if I'm, like I said, guys, we know in the chat, guys, if we're hitting it 34 out of 100 times with the 2-to-1, we're going to make money. So having those strategies, because sometimes the breakouts are all going to be getting faded, and that could be just the overall market context. And having a mixture of that fading type of strategy and the breakout strategy, I think really helps me to stay in balance.
I love it.
Love it. All right. So here we go. So we're at an hour. I know you got to get back to the house. That's more important. We need you to sell the house and get back to us here on Twitter. But hey, I appreciate you. I'm very grateful for having you here. I'm grateful that you're able to add so much value to the audience. At the end of the day, it's all about learning and giving to the community. And I'm so happy that you have a channel that, you know, you have so many things out there that people can learn from. So appreciate you greatly.
Thank you. I am so glad that I met you and found you. That's the funny thing about Twitter. You know, you think that you're following the best that's out there, and then you'll stumble across one. And I was like, I need him. This is my guy. And I love, oh my God, what you do. I was scrolling through your page today and I was like, this dude, he doesn't stop. He's just giving. You guys, your followers must be so thankful for you.
We're going straight to the top, man. We're going straight to the top.
Almost at 30,000.
Yeah, hopefully we break that soon. And it's important to give back. It's very, very important because I know you've been in this situation as well when you first start trading, and it could be a really dark journey, especially if you're losing money, and especially if you're losing money that you can't afford to lose. And there needs to be people in the community that are not, that are not just gonna pump things or make people have FOMO. There needs to be people that are willing to be teachers and willing to educate. And anytime I see someone doing what you're doing, I know we have to collaborate, and I'm so glad that we are today.
Yeah, me too. And one thing I also wanted to say that really, really discouraged me when I was newer was and people that follow me know I never, ever, ever post my P&L. I might post percentages, but I will never post dollar amounts because when I was starting out, I mean, the traders that I was trading with when I started with the chart guys, like these guys had, $10,000 gains, and I'm trying to, eke out $200 and it was disheartening, and I was like, why can't I do that? So I never post P&Ls because it's not about the P&L. Focus on your process, focus on your I'm probably going to say this wrong, your batting average. Just hit a bunch of small winners, build your confidence. Do not compare yourself to other people. You are not other people, they are not you. You are not trading their kind of money. Just do you, and don't get so caught up in the dollars. And anybody who's trading, this is you're giving everything all the time. So just don't, oh God, you have to do this for the passion. This
Yes,
is not about money.
it's not.
You're a trader because you love it. You eat, sleep. I don't want to sound like JB, but it's all you think about.
And I can attest to that for sure. And yeah, and the thing about trading is that I also had a similar story before I got into my CPA world. I worked as an overnight manager at one of these stores like CVS. Actually back in Canada. I was originally from Canada, so I worked there.
Oh, I was gonna guess that. I could hear it.
So I worked there as an overnight cashier, worked my way over to supervisor. Then I became a manager while I was going to university. And let me tell you guys something. Trading is something that you can make money in your sleep, like you said earlier. It's something that there's no limit to what you can make. In the real world, even in this industry, as a CPA right now, guys, there's a cap to how much you can make based on industry standards, et cetera, et cetera. But from trading wise, there is nothing. There is no ceiling. You can make as much as you want. You can work as hard as you want. And that freedom is something that a lot of people crave. And I really want to push that out to everyone is that if you want it, it's going to be hard. It's not going to be easy because we're competing with, sharks on Wall Street. It's not going to be easy. But when you get it down to a science and when you can master it, it's something that you can take for the rest of your life. It's a skill. It's like becoming a doctor or a lawyer. You have that skill for the rest of your life. And, just keep pushing that positive passion to people and showing them the endless opportunities is really, really, really important to me. And I know it is to you. So again,
Oh, yeah. What you said was so important about freedom. My
yeah,
goal when I started doing this, I'm not trying to be rich. I'm trying to make my daily goal is very small. My daily goal is 300. And that might sound like a lot to some, and it might sound like nothing to others. I just want to pay my bills, live in a house, have, extra money, and be dependent on myself. I don't need rollies, Lambos, what boats, yachts, hot chicks. I don't whatever, I'm not in this for that. I'm in this to be self-sufficient and do it for myself.
got it. That's amazing. And like, again, everyone. That's the thing about trading is that whatever freedoms you want in life, you can get it from this game. And for me, actually, my goal is actually to make a shit ton of money in trading. And the reason why is because I want to prove to myself that what I'm teaching people and the way that I'm helping people, that it's not just me saying hindsight things. I want to prove it to the world. I want to prove it to everybody. And I also want to take the money that I make. And like I was telling you earlier, I want to build that school for children that I have in my mind. That's something that I have to do coming from, being an at-risk youth in my early age. And I had a few guidance counselors that really, really, were like, the key guidance in my life that I needed, and I want to be that for some of the youth in the future. So having that school, putting charts in front of them, getting them to know what inside bars are in grade 2, 3, or 4. Man, imagine if I just can't imagine if I knew that when I was younger, where I would be today. And I think that's something that if the mainstream's not going to push it, that's something that I will for sure.
That's amazing. And the world needs more people like you.
Thank you very much. Appreciate that. All right, Sarah. We're gonna head into chart requests. I'm not gonna keep you any longer. Thank you so much, and let's keep in touch. And hopefully, we can collab on some things in the future. It's very important to me to make sure to my audience that I bring real traders that are helping the world. And thank you again for all the content that you produce. And guys, please, 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 let's get Sarah to the 10K on the YouTube. Where are we at right now? Let's see what we did.
What
There
did
we
I?
go. Boom. 10K. So we got the
Yay! Oh
10K.
my goodness.
On her way out, let's show her the love and support that we have for everything that she does for the community. Guys, hit me with a 3 in the chat fast, and let's wish Sarah the best, and hopefully she gets that house sold soon. And I want to see this YouTube. I hope we can collab on more things in the future. Obviously, we're both like crazy busy, but we'll make
Oh,
time
I'm
to
100% down anytime. I'll take an hour out of my day because it's my passion. It's my love. 1,000% anytime.
Thank you so much, Sarah. Have a good night, and we will keep in touch.
All right. Thank you, Rich.
All right, take care. Bye-bye.
All right. Bye.